Japan's market posted really good gains, with the Nikkei share average up 3.94% at the close. Hong Kong stocks were also firmer on the day, the Hang Seng Index ending the day up 1.27%. Mainland China was also a hive of activity, with the Shanghai Composite Index increasing by 1.22%. Over in the United States, U.S. stocks surged on Wednesday, led by financial and tech shares, rebounding from several down days as oil prices pulled back sharply and investors gauged developments in the Ukraine crisis. The S&P 500 gained 2.56%, the Nasdaq Composite gained 3.6%, and the Dow Jones Industrial Average rose by 2%. Let's take a look at the indicators. Well, to take us through the markets, I'm joined by Cornette Van Sale. She's a portfolio manager at ABSA Asset Management. Thank you very much for joining us, Cornette. So international markets, including our local ones, seem to be taking things a bit more in their stride, beside the ongoing Russia-Ukraine conflict and, of course, the raging inflation implications that there are. So what's changed?
Yes, good afternoon, Nompu. It certainly is very interesting times on the market, and things are incredibly volatile. As we're speaking, the JSE is up about 1.5%. And as you've mentioned earlier on, the international markets were all up quite strongly yesterday. We are seeing that Europe is losing a bit of steam as we're speaking at the moment, but those are off some very strong sessions yesterday. So essentially what has come out yesterday is news flow from Ukraine that we might have a bit more of a positive resolution, with the Ukrainian president indicating that they might be willing not to join NATO. And that was one of the main reasons why Russia was invading Ukraine. And then also we have the European leaders meeting a bit later today to discuss the situation in Russia and Ukraine. So this has been positive for markets. We've seen a bit of risk on sentiment coming back and a bit of a reversal of the trends that we've seen over the last couple of weeks. So resource prices pulling back, oil prices pulling back, and your typical risk on stocks, tech stocks, industrial stocks, globally and here in South Africa, rallying after some very, very red sessions over the last couple of weeks.
So you've cited quite a lot of reasons. Are they the same in relation to the oil price? Why have those suddenly come down quite substantially, now hovering around the $115 a barrel mark?
Yes, so some of them are, which was the reversal of some of the trends over the past week that I've discussed. But one also has to be cognizant of the amount of speculative trading that happens in commodity markets. Things like short selling, hedging, covering short positions. So I think a fair bit of that was going on yesterday as well, so short selling. And then secondly, there were also a statement from the United Arab Emirates saying that they would like OPEC to increase production of oil. So that would obviously have a positive impact on supply and could impact oil prices as well. So those combined with the Ukraine-Russian news would have led to a reversal in oil prices.
So we know that the European Central Bank is going to be having their press briefing later on, telling us about their monetary policy stance. We know that they've been less gung-ho on tightening monetary policy than, say, the Fed. Do you think that they're going to hold back a little bit, given all the uncertainty? Because as much as you talk about some level of positivity on the Ukraine situation, that can easily change in the next couple of hours when we learn that discussions didn't go as well as people had hoped.
Yes, absolutely. So consensus at the moment is for the ECB to keep rates on hold. So the expectation is not for them to tighten at this stage, despite high inflation expectations. And I think that is in line with a economy which is under pressure from a growth point of view. And we must be cognizant that the Ukraine and Russian situation is going to impact the European countries a lot more negatively than the United States. So where in the United States we are still seeing very strong employment growth, we've seen low unemployment numbers, we've seen very strong economic growth, the situation might not look the same from a European point of view. And whereas the expectations are for the Fed to actually increase the rates by even as much as 50 basis points at their next meeting, the expectation is for the ECB to keep it on hold for now and possibly be in no rush to first see how the situation between Russia and Ukraine plays out before tightening aggressively.
The current uncertainty has been a real boon for certain resources, especially your gold and, of course, your PGMs. SibanyeStillwater produces both of those sets of commodities, but now we understand that its key mines have had to shut down because of strike action. To what extent has that share price been affected by these latest developments, and are you concerned?
Yeah, so at the margin, it will be negative for the share price. Just to put it in context, the strike relates to the gold mining division of Sibanye here in South Africa. So those are three gold mines in South Africa. That is about 15 to 20% of the profits of Sibanye. And they also have the platinum division here in South Africa, which is not impacted by the strike, as well as the international operations. And, precious metal prices will still be the main driver of the profitability of Sibanye, especially in those divisions that are not impacted by the strike. So just to put the materiality of that into context, at the margin, it will be negative for the share price. And the last time the gold division went on strike here in South Africa, it was a very prolonged strike. It went on for more than 5 months. The company did indicate that if this strike is as prolonged, the gold mines that Sibanye has in South Africa are old gold mines. They are at the end of their lifespan. And that might cause the company to accelerate their restructuring and closing down of shafts if the costs and labor costs in particular are too high for them to run these divisions. So at the margin it will be negative, but it has to be considered in the entire profitability of Sibanye as a company.
Yeah, no, thank you very much for that context, Konethe. We're going to leave it there. Thank you so much for your time. That was Konethe van Zyl. She's a portfolio manager at ABSA Asset Management.